Welcome to Freed on Business. He grew up in South Florida, has been in business here since the early 90s, and has closed over $3 billion in deals. He's seen it all. He always has an opinion, and he's always ready to share it. Informed, entertaining, and connected, he has his finger on the pulse of South Florida's business community. He's Jim Freed, and this is Freed on Business.
All right, everybody. Welcome to today's show. I want to welcome our guest. It's episode number 824. Ed Cairo of American Home Finance Group is back. Ed is 30-year veteran. Try not to age him, but Ed's a veteran. He knows the residential mortgage market. We're going to talk about where rates are, where rates are going, and the impact on the residential market, whether you should refinance now. We've been getting calls. I do a lot of work with Ed in this space. So we're going to talk with Ed in just a moment. I'd like to welcome everybody to the show. I want to remind everybody we're streaming live on LinkedIn, YouTube, Facebook, Twitch, and Instagram. You can find us at Freed on Business or at Jim Freed. And as I said, our guest is Ed Cairo from American Home Finance Group. And as always, I want to thank our sponsors for a long time, 14 plus years, Warren Henry Automotive. And now let's bring on Ed Cairo. There he is. Hey, Ed, how are you?
How are you?
I'm doing great. How about you? I know you had a little surgery. Everything good?
Got a little surgery. My shoulder is actually moving now, which is good. First day without my sling, so I feel good about that today. Don't tell the doctor.
That's great. That's great. Well, you know, it's been 5 years since COVID and the bargain basement rates. I know that we were able to get some people a little bit lower than 3% mortgage rates. That got everybody kind of addicted.
Yeah.
Rates went up. Rates are now in the, I'll call it high fives, low sixes if you're perfect. Mm-hmm. And people are going, wow, that's really a high rate, because they remember stuff from 5 years ago. But people with mortgages that were 3 or 5 year adjustables are having to deal with that. Maybe their term on their mortgage was only 3 to 5 years, so they're now facing a refi. What's the circumstance of the residential mortgage market, and is now the time to get a new loan on your house?
Well, I mean, as far as purchase business, I mean, the purchase business is still relatively strong. What I can tell you is everybody's situation is different. You know, some people need to be in a property now, and then we try to work out the best possible deal they can. Some people need a little bit of cash out of the existing house that they have now, and we're paying off some debt. You know, some of these credit cards are running 22, 23, 24% plus. So some people are getting HELOCs, you know, which are very, very popular right now. It's a great way to go. So it really depends on the person, you know, depends on exactly what their circumstances are. If they can wait, some people are feeling that they should, but you wait for the rate, but then the price is going to end up a lot higher later. So, you know, pick your poison.
So it sounds to me like what we really call the cost of occupancy is pretty reasonable compared to what it was when rates spiked before, and there was the big run up in valuation. Now it seems as though the sale market has slowed somewhat, but sellers are going to have to, you know, recalibrate their valuations, which, you know, maybe that will bring more people into the marketplace. And you said HELOCs are in fashion. Are you seeing more demand on the HELOCs?
Yeah. Oh yeah. Ton of HELOCs right now, because you know, there are people that, like you said, have these 3%, 4% interest rates, and they don't want to refinance for, you know, a higher rate, but they do need access to capital. So that's really a good way to, provided they qualify and they have good credit and so on and so forth, they have equity in their property. It's a good way to access, you know, some money if they need to pay down some consumer debt, pay their income tax, you know, kids' college, you know, whatever the case may be. They're very popular right now, but you know, it's like anything else, right? The rates are historically about where they should be, I would say, you know, if you think about it, not 3%, but you know, the 6s and 7s and 5s and all. So if they were to purchase a piece of property. The benefit to the buyers now is that the sellers are starting to realize that they can't shoot for the moon and grab all this money. Okay, they can make deals. You can make some deals with the sellers where they'll contribute some money towards your closing costs, which helps your financial position, without taking so much money out of the bank, cash flow, so on and so forth. So there's a lot of deals to be made right now because the sellers aren't sitting high on the hog anymore. They're realistic, and they're starting to get more realistic that they have to make a deal in order to sell the property.
So, Ed, it sounds to me like a well-qualified borrower, with W-2 income or even tax return type of income that you can demonstrate that's trending upward. These people are financeable, and the lenders are looking to make loans too. So, what kind of deals are you seeing change? What's the change that the lenders are making?
Well, one of the big changes right now are believe it or not, the 5-year ARMs, the 3-year ARMs are starting to come into vogue on the FHA side. You'd have to, to really make it make sense, the customer might pay a point or two to get the rates down, but they'll be in the 5s. And, a 5-year fix or a 3-year fix in some cases plays right into, where they need to be, because the average consumer stays in a house for 4 years. Doesn't mean everybody does, but on an average in Florida, that's about the length of the time that they're in the property, or at least in the mortgage. So if it's structured properly, there's a lot of things that we can do to make it really, really advantageous to the buyers, especially incorporating the sellers, allowing them to do like a 2-1 buy down, for instance, where they'll buy down their rate for a year or two. Sellers are willing to do things because if you, like anything else, think about it. If you need to sell your property and it's sitting on the market for 4 or 5 months, you may be apt to play the game a little bit to help out the buyer to purchase your property.
Well, Ed, it sounds like today may be the time to move. It sounds like there's been at least a 100 basis point adjustment in interest rates from the peak that we saw after the post-COVID period. If you could stay with us just a minute for the break, we'll be right back with Ed Cairo and the bottom line on the residential mortgage market here in South Florida. Miami Podcast Studios, take it away. I want to thank our friends at Warren Henry Automotive. They've been sponsors of the show for, 14 years now. We had Larry's in on a while back, and want to thank Larry, Eric, Ismet, Gerald, everybody over at Warren Henry for treating myself, my clients, my friends, my beautiful wife, Vivian, and my mom, just like family. Just took my car in, got it serviced. Of course, it was all covered under the warranty. They treated me like gold. They gave me the loaner, which I reserved early. Looked at all the new cars in the showroom. Picked out what my next car is going to be, God willing. So it's really a great time to buy or lease your car. And as you know, if you do want to buy or lease a car, you want to get every advantage that you can. That's why I have to check out Warren Henry, Land Rover, Range Rover, Infiniti, Jaguar, and now Ford, Lincoln, Mercury up at, I guess there's no Mercury, but Ford and Lincoln up at their 151st Street store. They've got Land Rover, Range Rover at their award-winning South Dade and West Broward stores. They've got a store in Key West that's got all the great nameplates. And of course, they've got a tremendous Audi store up in Gainesville. So give them a call, reach out to them. If you're looking for a car, join my mom, my friends, my clients, my wife, my mom. We're all members of the Warren Henry family. You should be too. Always the best price, always the best service, always Warren Henry.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
All right, we're back with Ed Cairo from American Home Finance. We're going to get the bottom line, the last word from Ed on residential mortgages. And Ed, it seems to me like rates have stabilized. The sellers are a little bit more motivated to sell. So if somebody's sitting on the fence, now's the time to get off that fence and buy their house, and financing is readily available.
It really is. And we're seeing an uptick in a lot of purchase business right now. And I think those are part of the reason. Cost of capital is difficult to obtain, especially if, people have investments and they don't want to liquidate their investments at this point. So if there's a way that the seller can help contribute some of the closing costs, for instance, or maybe lower the sale price or those types of things, I mean, it definitely benefits the borrower, and that's what we're seeing.
Well, great, Ed. I want to thank you as always for being there to assist the people I refer to you. They always get great service. They're always happy with that. And I want to remind everybody that they can reach out to me. I'm at Sandstone Realty Advisors. I'm the founder. We have families that we help all across the world execute their business plans in real estate. So reach out to me. There's the contact information below. Remind everybody that if they missed something on today's episode, they can check out the replay on any of my socials, LinkedIn, Facebook, Twitch, or Instagram. Of course, they can look at the handle Jim Freed or at Freed on Business. They can head over to the at Jim Freed YouTube page, Apple Podcasts, Spotify, or anywhere you listen to your audio. We'll be there. So check out all of our other past episodes. I want to thank our friends at Warren Henry. I also want to thank the folks at the Bergstrom Center for Real Estate Studies up in Gainesville at the University of Florida. And I want to remind everybody that the person wants to do something, finds a way, the other finds an excuse. Now go out there and make it happen. God bless you, and God bless the United States of America. As always, the rest of the show is yours, Miami Podcast Studios. Do your magic.